Let's jump into it. Time for a bit of the weekend wrap. Where we at? 10:41 p.m. on Sunday, 14th of September. So already sort of halfway through this month as well. I know for like ages, like some holidays are going to be finishing soon, Then bang, already done, and 2 weeks back into it. It's been a hectic 2 weeks already. Obviously, this coming week is going to be sort of no different. Actually, this is probably kind of what it's been building to the last couple of weeks. So I think this could have potential to be sort of shaping us for the rest of the year after this week. But yeah, we'll get to that in a moment. Last little bit of news for the week was, look, it was pretty quiet actually to sort of end the week off, and that charts mainly respected their levels. We had consumer sentiment 12 o'clock local time on Friday night there. As you can see, look, it's waning a little bit, and it is still dropping off a little bit there. So, which is kind of sort of a little bit odd because it does sort of fly in the face of, I mean, look, if you've got potential recessionary fears, you've got consumer sentiment dropping, you've got all these other things. Equity markets are still on a roll, and they're still pushing to the sort of highs. So that's certainly something that's a little bit odd, just based off how things kind of should be working. Because obviously, sort of like, I mean, if sentiment's low, are you really sort of thinking, hey, look, that's the time to sort of be sort of really pumping? Like, is that filling everybody with a whole heap of sort of risk on kind of energy and want to sort of jump into the market there? I think obviously not, but I think sort of like really it's just the lesser of two evils kind of thing. And with FOMC coming up this week, rate cuts coming, we know that the market's going to be pricing prior to it. Same with the thing, equity markets on paper technically like rate cuts because if you put it on a very basic level, more money in the system, yada yada, more money to speculate. But the thing is, I think there's a couple of points that we're looking at the moment now. One being sort of like job numbers down, obviously, that's the big glaring one that everyone knows, but consumer sentiment down as well. You are on the cusp of, I know everybody sort of like is always doom and gloom, oh, recession's coming, but these are the kind of little building blocks that you do see prior to these moments. And I think that the penny may sort of drop once you get that rate cut. That hold on, wait, things aren't as sort of, well, not people are necessarily calling it so rosy, but it almost sort of seems like it needs that confirmation trigger to then sort of go, okay, bang, and maybe that'll be the time that we see these things sort of fall back into line. But for the time being, it's still pushing up towards the highs for the moment. Have a look at this week coming up news-wise and that. So as I said, look, FOMC is the big one that we're looking at, but just sort of chopping through the week, it's got bank holiday on Monday. What have they got? They always have interesting ones. Respect for the Age Day. Okay, interesting. Cool. Well, we've got a bank holiday there on the Monday. Bit of China data coming out there. Retail sales seem to be holding quite well. Industrial production, I mean, flat from last month. Still on the lower side of things that we've sort of seen recently. But I mean, look, it goes in line with things, and then we've seen quite a strong one. We've seen a very strong one since April, really, but that's coming into some major levels in that at the moment as well. And yeah, retail sales 3.7, 3.8. How's it go? Again, it's on the lower side of things, and I think they really do need to get their sort of consumption up, and I think that is the kind of underlying goal of what they're kind of looking to do. But particularly with all the stuff sort of going on with the tariffs and all this kind of stuff, because the idea obviously is that they want to be able to ship out to, the US market. US is the like golden market because they live on consumerism. I think I mentioned the other week that sort of like there was some sort of saying that like the Americans, they sort of for every dollar they make, they spend $1.50 or something like this, and for every one they make, they save 30%. Over in China, so to show the sort of stark sort of contrast between the two markets, and this is why everybody wants to be able to sell into the US market. Not only have you got a lot of people over there, so you've got a big pool, but you've also got people that love to spend and love to spend beyond their means. More locally, like retail sales and that for China, well, they're just not spending. They've been through the tough times and that, and they know it's better to sort of hold on to that one, I suppose, or maybe they've been trying to put it into what's it called, sort of housing in that for a while, but obviously that hasn't been going too well over the last couple of years. But anyway, look, we'll see how this all plays out. A little bit more sort of China data there, nothing really too much of note. I don't think these are going to be massive market moving bits of data, by the way, as well. I think we're going to be pretty quiet coming through to FOMC. Monday night, so a little bit earlier in the week, we've got Empire State Manufacturing. This has been quite weak, as you can see, 4.3 against 11.9. So they're expecting it to be slow. Actually had a bit of a tick up over here. So I think these, because you also got the Philly manufacturing as well, and I think that was the one. So these have been swinging around quite wildly recently. Let me look on the graph. Does it show us anything more? I mean, this is just up and down, very much so the last couple of months as well. So again, look, it's just another one piece. It's not going to be the market moving, market shaping bit of data. It's just something to pop in there. The more and more that I say these things, and this is what I'm saying, like, they're expecting a slowdown here. Um, Consumer sentiment's down. What is it that sort of, and this is an open-ended question, but what is it that's really sort of giving everybody so much confidence to be in the stock market, other than, there's not really too many other things for them to pump their money into at the moment. Like, you know what I mean? Like, US dollar is on the cusp of, well, the Fed's on the cusp of cutting, which we've seen has been weighing on US dollar for a long time. So it's not really a viable option necessarily down there. Gold, I mean, obviously gold's pumping along, still near whisker off the high, so there is some cash going into that. But at the same time, it's also up like $900 on the year. So, the risk reward is not as big as well. But I suppose, look, in all fairness, all the equity markets are at their highs there as well. So, yeah, it is a bit of a perplexing thing, but it's not normal. So it is. I think that is flashing some sort of little warning sign, but we will see. Moving forward, so it's not really a great deal on the Monday. As I said, that's probably the highlight of it all. Not that it's really a sort of massive market mover. Through to onto the Tuesday, we've got sort of this Hunter guy, so to speaking. Not really thinking this. These speakers don't really sort of tend to have too much impact on the market. That's it through Asia. Bit of UK data coming out there. Where we got Claremont Council. That's um, I think that's the unemployment. So everybody has a slightly different number, but you got unemployment rate, sorry, unemployment numbers. So yeah, so it's actually looking to sort of tick up a little bit with their unemployment numbers. So UK is also not doing particularly great. And again, these are the kind of things. So while the US is sort of possibly maybe it's being masked a little bit because it's like they're not doing too bad, but they're not doing too bad in comparison to a few of these other people, like UK in this situation. So. Just comparatively, they're probably not that bad. 4.7, still reasonably high for an unemployment rate. Um, Moving forward, we've got CAD CPI, seems to be decent through this one through here, around that sort of like, mid 2s to 3% kind of thing as well. So, I mean, again, look, with inflation, apart from the fact that Fed have sort of said, hey, look, we're looking more at jobs and all this kind of stuff, inflation is still an issue. And I think that this is the thing that it's spent so long hammering these things to sort of get down towards their 2 to 3% band, but 2% obviously being the ultimate kind of goal. They kind of sort of everything's really come to that sort of last little stutter at the end. It's almost sort of looking like it's going to take as long to get this last percent down than it did take to get sort of from 6 or 7% down. So that's why they're sort of saying, hey, look, we're accepting of that, and maybe that's why we're sort of focusing on the jobs to make sure that that can doesn't fall over in our quest to get the last couple of percent. Retail sales out of US, a slight little tick up there. That's core retail there. So we're seeing a bit of a mix of these kind of bits of data in that recently. In that, so your core um, seems to be what we retail's excluding automobiles, also known as retail sales ex autos. Okay, so basic your basic spend sort of stuff and that sort of see slight tick up there. And I guess, well, does this make your normal retail sales then including advanced retail sales? Change it economy. Okay. Look, again, these are not retail sales have the ability to maybe sort of move the market a little bit in sort of normal sort of surroundings, but it's not, again, it's more just sort of like a short term sort of maybe flick up or flick down, whichever way the data sort of comes in. These kind of things, if they come in sort of like a bit of a shock number, then you may sort of see these things produce a little bit more. But it's a third tier bit of data, and that it's not going to be like, okay, here we go, wow, retail sales are way up. Unless you get these big shock numbers, then you might go, okay, now this is something we need to think about. But yeah, these kind of numbers are not really sort of screaming anything at you. Ticking along, not a great deal through here, not a great deal here. We've got CPI over in UK. So a pretty sort of reasonably sort of chill sort of start to the week, but I think that's always sort of like, the quiet before the storm. It sort of seems to have been the last couple of weeks as well. CPI over in the UK, 3.8%. So definitely Let's scratch up on a few of the other sort of majors. What is you? I think US came in. What did they come in at? 2.9 or so, and what else have we got on there? Look, it's actually a bit of a sort of cruisy kind of start to the week. So moving forward, we got okay. So now we're starting to get into the thick of it a little bit more. We've sort of got the rate sort of decision over in Canada on Wednesday night, 11:45. So they're looking to cut 25 base point there. We'll sort of see how this sort of reacts. Again, Canada is one of those ones. Yes, a part of the DXY, but it's not really going to be permeating through the rest of the market a great deal. 4 o'clock on Thursday morning. This is the one that we're kind of looking at. So this is the big one where market's been going, okay, what are we going to be getting? We're going to be getting, 25 base point. We're going to get possibly even a 50 base point, is what some people have sort of been sort of touting in the moment. Personally, I don't see it sort of coming in for a 50 base point. I think it's a bit extreme with it all. But, the more that the market prices that, the bigger the counter move may be if they do actually just stick to a 25. I think there's a very almost, I mean, look, it's not even priced into the market, but you can never say anything's 100% out. Possibility of them holding. If they hold, the dollar will absolutely rip. Gold will probably tank. But I would say at this stage in that sort of 25 base point looks like a pretty sort of sure bet for it all. And I think that's the interesting thing that people are going to be looking for. What does he have to sort of say in the press conference afterwards, half an hour later? Because, if it's 25 base point, everybody's been calling it. I think the last couple of weeks, as I said, it's been busy since people got back from their summer anyway. But we've had what, 5 bits of sort of jobs data and that coming out, not painting a great picture. The revision, like inclusive of obviously the big sort of revision for the year, we had CPI come out, which was something that may have sort of put a little bit of a question mark over things, but it came 2.9% or so up from 2.7, I think. So, it wasn't really like, okay, warning bells, we need to actually still consider inflation in the, like, strongly consider inflation in the equation, I should say. But I would say 25 base points is pretty much looking like a sure bet thing in that, and mainly the market's just going to be looking for what happens with that press conference. Typically with these things, you'll get a bit of a sort of a move in the sort of like, between the rate decision and the press conference, just in people sort of having outside bets, I guess, pretty much in that. So, they'll put a couple of sort of a dollar short positions on in case they do actually cut by 50. But if they don't, you're going to see those things peel off pretty quickly. But most of the time, it just flicks up and down and that. And by the time we get to the press conference, it'll be back to wherever it sort of was prior to that bit of data. But the press conference is the one that's really going to set the tone to sort of see what are we expecting through the rest of the year. Now, you've seen a couple of things where people are sort of saying, hey, look, we're looking at sort of 325 base point cuts through till the end of the year, which we're in September now. So, it's only 2 left after this. So, you know what I mean? That's pretty sort of considered thing. And that in itself is going to keep the sort of like, the foot on the neck of the US dollar potentially sort of moving forward. So really got to see what happens. Like, as I said, last year they cut 50 base point. We had this big sort of rally afterwards over the next couple of months. Always a possibility, but the thing is, they didn't keep cutting after that. They went hard and fast with the 50, and then sort of let's see what happens with that. And obviously, US dollar sort of appreciated after that with lack of more cutting coming after there. Actually, just looking around there, if we can find, there is this little graph here. And so you can see that it's like maintained quite flat. This was sort of leading into that cut last year. Bigger cut coming down, obviously from 5.5 to 5. And then sort of like, they cut again in November, but they haven't done anything since. So they've just been holding it sort of flat for the better part of a year. So it'll be interesting to sort of see what the market's reaction is after that. But I'd say sort of leading up to this kind of thing, typical kind of thing, as you said, as we see with these, is that where we go? So back onto weekly. So that was one sec. There we go. Yeah, so typically sort of what we sort of see coming into these things is obviously that, like that, they're expecting a cut. You'll probably see sort of US dollar remain fairly heavy sort of coming into this. And I wouldn't be surprised if we get a little bit of a flick down, 25 base point cut, and then we start to see a bit of a regret, sort of flip after that. I do think that, so as I said, given all these sort of other bits of data, the fact that they're cutting, you've got to think, okay, you're not cutting generally when the economy is in a super strong rate. You're not sort of going, hey, look, everything's so great, let's cut rates and that. You'll think, well, at least at this point, they're not. You're getting the job numbers that are not looking particularly great. Sentiment's down. Retail sales aren't moving a great deal there. You've got manufacturing numbers that are all quite, not super. Um, you know, I don't know if that's necessarily the time that people go like, yeah, let's buy the US dollar, but certainly it perplexes me as to sort of why the equity markets still keep pumping to the top side there as well. So this could be a turning point for the equity markets, and what could get the US dollar going is that equity market sell-off. It may just sort of find that people go, well, you know what, we flushed everybody out in April, we've run it up for 5 months since. We're now at all-time highs, US dollars at multi-year lows. Maybe there could be some opportunity in it there. And just by default, by selling off in the equity markets, we might see a little bit of a bid put under the US dollar, despite the cut coming. Because a lot of these times with these big sort of events, it's like a lot of the lead up, lead up, lead up, and then you get it out of the way, and it's like, oh, okay, we're done with that. We know what's happening. Let's keep moving forward. If we do see that and people sort of start to paint them, and this is why the press conference could be quite interesting, if they paint a pretty sort of like not particularly rosy picture for the economy, that could spook the equity market. We could see that sell off there a little bit more, and that, as I said, just by sort of default, you may see US dollar catch a little bit of a bid. But I've said this a few times, and it's certainly just look, it's holding flat for now, but it's certainly not getting up off the ground, not holding any moves up off the ground. Um, Moving forward after that, we got GDP over in New Zealand. It's just quarterly thing, so a little bit of a slowdown over there. We got Aussie employment again this week, and 4.2% and 21,000. So back again, spamming mid 20s. They actually did like quite well last month. That's the closest pretty much I've ever seen them get it. But that was pretty good for them. So 21,000 expected. Again, look, I think the big question with Aussie at the moment is like to do with the RBA because um, they're like, yep, cool, we're going to cut it. They held that extra one where everybody thought they were going to cut, the market thought they were going to cut. Then they cut the next time, and they said, look, you know what, it's not a matter of, well, originally on that one where they held, they said, look, it's not a matter of like if, it's a matter of when, and it's about timing. But we saw inflation spike last time. I don't know if that's going to be enough to sort of undo everything, but this is the whole point. It puts a bit of a question mark over the rate decision. So, had inflation not been an issue, well, they probably would continue with their cutting cycle. But if they've only sort of cut once and inflation spikes 1%, it could be enough to make them go, hey, well, let's just hold our horses a little bit and see what happens. And this is why Aussie's sort of been catching a little bit of a bid among other things as well. Weak US dollar, stronger yuan, equity markets at highs. There's a number of these things. But the thing is, it's sort of like, till we sort of see these numbers start to sort of tick up and these numbers tick down, so lower employment, higher unemployment rate, this side of the market, because they've also got the dual mandate, like with the US, the jobs aren't too bad. If we get up to 4.4, 4.5, that's when they'll probably go, oh crap, we need to do something about it. Put in another couple of really consecutively low employment numbers, we might need to do something about it. But at this point, these numbers aren't too bad. So you've got the dual mandate. You're either looking at sort of like, employment and, through a number of different facets and that, but also with inflation. If employment isn't too bad, unemployment rate, employment change, but inflation has gone up a little bit, well, it's the same sort of thing. Like the way you combat each of those things are very polar opposites. And if you're not sort of worried about the job so much and you're worried more about inflation, well, that's a bit more of an idea of, okay, let's hold before we sort of cut a little bit more. You don't necessarily want to keep cutting and cut drastically into particularly a spiking, but even a rising inflation. And that's why it's slightly different to the US because they went up 0.2%. We went up 1%. It was a big kick up for the CPI for Aussie. So I think this will be interesting. But again, look, if this stays and remains low, you're going to see Aussie, sorry, I should say, sort of like, if the employment numbers are strong, if the unemployment remains low, that's going to see Aussie kick a little bit more, unless we see US dollar really pump off this one here. But if we see US dollar sell off after FOMC and then we get these numbers here, that's going to be a punch upward for Aussie dollar there. later in the day, we haven't got really too much going through there, but then you got Bank of England, and Bank of England are looking to hold at the moment. They do that sort of little split as well, sort of like, they actually sort of give you the readout of the numbers of, how many people wanted to hold and cut and all this kind of stuff. Slight little bit different over there, but again, it's not a big one past your GBP pairs. So yeah, it's just interesting to see what they're doing over there. But as we saw, their data isn't particularly rosy at the moment either. Unemployment claims, these spiked up the other day up to sort of 263, up about 30,000, yeah, from 235 to 263, so up 30,000 in one print, which is quite high actually, and it's higher than it's been for quite a few months. Well, as far as we can see, going back here, at least to sort of May last year, going way, way back. Yeah, so this is the thing exactly, I mean, look, that's going back, what, to 2024. This was the highest sort of thing. So, question now, is this just an outlier? Is this going to be just it's just happened to spike up this week, or is this kind of the start of a new trend of things ticking up a little bit higher? Obviously, they're expecting it to come back down a little bit, 245, but is still at the higher end of what we have seen for a while. But this is another one of those little bits of data. This comes out weekly, but it's one of those ones that the sort of market is looking to, obviously, with job numbers. And if the jobs aren't great, which we've seen these kind of things, it really is more in the camp of, they're going to have to cut a little bit more before this gets completely out of hand. But yeah, that was definitely a little bit of a spike up there. And we saw US dollar actually take a bit of a beating off that one as well. Philly Fed sort of manufacturing. This is what I was mentioning before. These numbers are also still quite low, so it's not a great sort of positive picture over here as well. And then to finish off on Friday, we got BOJ, and BOJ looking to hold. And they're forever sort of saying, hey, we're going to raise rates, we're going to raise rates. That is going to weigh on the US dollar if they do, when they do, if they do kind of thing. But for the time being, there seem to be a lot of huff. We're going to do it, we're going to do it, and they never really do. So anyway, look, data-wise, it's a quiet start to the week, but that's going to be about it. It's going to be absolutely thumping through the second half of the week. So let's jump onto the charts, have a little bit of a look anyway. So we've got DXY. Look, this is not what I was about to sort of point out, but it is just what happened to come up on the charts there. We got this big, long, this is a weekly sort of support that we're seeing it sort of really dance around the bottom over here. Look, supports are there to obviously support, but they're not impenetrable to being broken. But if we look at this, and again, this is on a weekly moving in here, this has really just been completely flat for what's last couple of weeks, coming back to after it came off the lows in July. Last 8-9 weeks or so, it has really just been sideways. A little bit of a spike up, but obviously they slapped it straight on the nose with that. Bit of a sell down last week, of course, but where it sort of managed to sort of get back up into isn't too bad for it all. But of course, FOMC is just going to be the driver this week. We're either just going to get something and break to the bottom side here. If we break to the bottom side here, that is going to be quite a big drastic move. Because obviously, weekly supports, like any sort of supports, they're there to support price, but they're not impenetrable to being broken in that. So this is the time that you really want to see US dollar maybe come down, kiss it one more time, and then maybe spike back up and sort of see some sort of harder, sort of faster kind of reversal. And I've covered sort of why I think that could be a potential for it. If you have a look on lower time frames, let's get down on, say, the 4 hours, something that's a little bit more actionable. Look, we had that sort of break. I really thought we were coming here. We were set up for it all, but what data was this? It was on the Thursday. That was the CPI and the unemployment claims. And this goes to sort of paint a picture of how the market is really moving at the moment. Like, as I said, inflation was up. If we got a print with inflation up, even just a couple of points in that a couple of months ago, it would have been, okay, put a little bit of a bid under the US dollar because, hey, they're going to need to cut a little bit more. But at the same time, you had those weekly unemployment claims and they spiked right up, as I just showed, stronger than they've been or higher than they've been for, I don't know, a couple of years almost. And market just said, bang, well, we're looking at jobs, bang, and they smacked it down. And that's really sort of where we kind of sort of really just dribbled the rest of the week. There was a little bit of a rally attempt. I was saying on the Friday, look, if we could get above this sort of little zone through here, might be a little bit of a sort of push up. But as you can see, it got up to the 61%, which is a decent sort of push back up off the lows there, particularly after such a hard sell down. But as you can see, every time it sort of tried to break up higher, just slapped on the nose. So look, it's Still kind of really just chewing along sideways. It's got a little bit of the sort of downtrend channel coming. This week is really going to be the big week. I mean, if you drag this out and sort of say, hey, look, that was kind of the channel lows for it all. Sorry, channel sort of support. This could be your first line of support on any sort of drastic sort of sell down. But, I think underneath, let's go through here, underneath this 97.29 area, you're coming down, and these are really going to be your big tests. Which at the moment it looks like, it looks like it's got a little bit of room to move. But of course, remember when this thing gets going, it can really sort of melt down a couple of percent before it starts to turn around. And this is why I think it's a little bit of a testament to what the US dollar is doing at the moment, albeit sort of very bad. These smash sell downs, these are all, if you wanted to sell US dollar down, you are really getting every little bit of sort of data and headlines and that in your favor at the moment. But the market just keeps buying it, and they keep buying it and buying it and buying it. And look, even sort of coming into the end of the week, they could have really bailed this thing back down. They could have just done a little bear flag and, okay, moved down towards these sort of 96 levels. But, buyers stepped in and they've held it, at least for now. So we'll see where we go. I think sort of, look, early week, if we do get a little bit of a sell down in that, I'd be sort of targeting sort of this sort of 97.28 kind of level to sort of see if we get a bit of a bounce up from here. I don't think we're going to be breaking this prior to the data. I've said this a couple of times, and a couple of times I've definitely been wrong. But, if we can get above Friday highs, I think that'll be something to sort of say, okay, look, we're just going to keep ranging this thing through till the week. So, I've set that alert underneath 97.45. I think sort of up above those sort of, where we go from here. Little alert above Friday highs, sort of get some sort of confirmation that we might be moving back up. Even if we do move back up, this is obviously a level that we've seen time and time again. This is the same level from the opposite side. The market bounced off after that Cook. Where was it? I think this might have even been in here. I can't even remember now. Maybe it was a little bit higher. I think it was this zone just here, actually. That level there. That's where we came down after the Cook announcement kind of thing. And as you can see, pretty much direct in line with where the market tried to sort of sell it back down again this time. So, look, I think that's definitely the level. That's probably your target. Should we take out Friday's highs? If we can get above that, then there's no reason why you can't sort of see a bit more of a dribble up. But at the moment, there's not really a great deal. I can't see anything sort of prior to FOMC that's saying, hey, yeah, great, let's buy a whole heap of US dollar, other than sort of people just sort of maybe positioning, getting ready for FOMC. But certainly through Monday, they're the levels, Friday lows, Friday highs, use that for direction. Targets are the sort of 97.27 or back up at 98. Get above 98, look for a little bit of a squeeze, but again, I want to sort of say I think it'll happen, but it doesn't, certainly not looking easy for it. Have a look at Aussie next, because Aussie's definitely came back down. So what was the plan from Friday? I think it was back to 35, which we saw buyers come in pretty much right on line there. So 35 is where we were looking for the target. Obviously, we came down, got a couple of attempts to get underneath, but the bounce and the buyers sort of held that zone there. The fact that it kind of came a little bit off the highs, okay, you take it. Okay, maybe you could see this for another attempt back down over here, because certainly, you know what I mean. It's on its pullback. It's trying to move forward. I would say you probably get a little attempt down here. If we can hold that 35, then I think you move back up like this. If it does come through here, then you possibly could just see this whole big move kind of be undone. So you'd be targeting 66 just for that body fill through there. The body fill through that. I'll put an alert on that one as well. Cool. That would be basically, as I said, on a confirmation close. Like, you may want to get underneath 66.27, but I'd say 66.35. If you can get a close underneath there, you'd be targeting the body fill to the downside. If we get a hold of the buyers here, then we'd be targeting the high, so 66.70 up through this zone here. Let's make this proper. Make that a zone. That's where we'd be looking. So I think this is the crucial kind of point that we'll see. Now, thing with the Aussie dollar at the moment is it actually just took out yearly highs. So this is like not without any sort of other reason. This was Thursday night, so this was off the back of that unemployment data and CPI, and basically, to me, it was the confirmation of the question being between 25 and 50. I think still, if I've said this time and time again, but like if CPI had come in high, you would have the question, or you'd see people saying, look, are the Fed able to cut rates into a spiking, rising CPI? That obviously didn't happen, but that's where the question mark would have been placed over it, and you'd be like, okay, well, are they able to? If not, well, it's a hold. If so, 25 would be a cautious and more reasonable approach. So it was a question between 25 and 50, but then the fact that they actually got a very small tick up, but not really anything too drastic within that 2 to 3% band, which they've said they're happy with, or at least for the time being, that sort of basically gave the green light to sort of say, hey, look, you know what? Inflation's not going to be a question mark, at least at this rate decision. They'll mention it, but it's not sort of something factoring into whether they've cut. I mean, Powell has told us that sort of like, 25, he's told us that the jobs are their sort of main mandate at the moment that they're looking at as a driver or decision maker for whether they're going to cut. So with CPI out of the question, all that endless weak jobs data, the question now is 25 or 50, not hold or 25. And this is why we saw, these sort of moves off this. Aussie was a big beneficiary of this because it's been trading so heavy for so long. But the thing is, it's now, okay, no, I shouldn't say but actually. What it did actually allow it to do was break through to yearly highs. So it's really put in probably one of the biggest weeks, or at least highest closes on its weekly move that we've seen in a while. If we see this thing sort of hold up around these levels, we could be seeing definitely some higher numbers. And this is what I was saying, that if you see job numbers, like sort of unemployment rates stay low, if we get high job numbers, if we see US dollar sell off post FOMC, well, that's everything ticking Aussie to sort of move that a little bit higher. I put this on the other day, where it's on the daily. The four sort of reasons for this thing to be sort of moving up. Where we got it? Oops, that was on the other Aussie chart. Yeah, these things here. And as I said, RBA, their question, there's a question mark over whether they're going to cut. Equity market's still at the highs. Yuan's still going strong. US dollar for the time being is still trading heavy. Now, the question is, does this remain? If we see US dollar sell off even further, well, we're going to see that down. We're going to see strengthening of the yuan. RBA is going to be fairly indifferent, but particularly if we get that Aussie data coming out with the RBA, and as I said, if the unemployment rate is low, if the employment numbers are high, well, that's going to put a question mark and possibly more of a hold idea, or at least talking of hold. And by talking, I mean sort of market potentially positioning for that kind of course of action. And equity markets, if US dollar sells off, we'll have to wait and see about this one. That'll be a bit more. That's probably the bigger question, I would say, for this week. Inversely, if we do see, as I said, equity markets sell off, we could see the US dollar start to push, which would push the yuan down as well. RBA would be the only one that would be kind of unaffected from that. So that's the potential of the of how I sort of see the Aussie sort of coming through this week. What I am sort of thinking with this thing is, though, is we're up towards these kind of high levels. The sort of last push down here, coming up to around 127. I think a break up any higher is going to run into a little bit of trouble up around the 66.80 level. But in saying that, I think the first test is going to be what they do at this 30 level here. Because with the whole structure, this could be seen as, okay, it's the end of the week, so you may not really count it so much. But here's your structure moving up. You got your reversal, your pullback. This could be the third attempt here, but I think that's the end of the week. So I think you're basically still sitting around here, and I think you could potentially see a move up there. Should this fail to break those highs, then we can start to roll it back down a little bit. Or inversely, if we come down and close down underneath 66.35, I think we could see a deeper correction back to, like, as I said, that body fill, or maybe even a 4-hour body fill here. But certainly targeting around that sort of 66 level before we sort of see what do they want to do. They want to drag it up a bit higher. It did sort of break to yearly highs. That's very bullish. But again, we've seen Aussie break to the highs a lot recently. and it doesn't necessarily compute into anything super positive for it. Like, I mean, I don't think we've seen, look at how many times here it's broken to the highs, dribbled up, undid the whole move. Didn't get past the highs here, got past the highs, bang, it sold back down. This one got past the highs, pulled back, held up there, sold down, past the highs, sold down. So, given how it has been trading all this time, you know, it's not outside the realm of possibility that we see this repeat again and that puts in a high and then we see some sort of level of deeper correction. Doesn't mean that that's the top and we're necessarily going to see it coming back down to these lower levels, but that remains to be sort of seen as to what they do with the US dollar. But certainly I think it's at this level now because we're seeing US dollar on some pretty crucial levels, ones on some pretty crucial levels. If they fail, I think just by proxy, Aussie could potentially be moving higher there as well. But certainly something that's actionable and that sort of come Monday at least. I'm looking what's happening around that sort of 66.35 level again. If the buyers come in and hold this another time, I think that's an open door at least to minimum target those highs at 66.66. Move along, we've got gold. Gold from Friday's plan worked out perfectly. I said, look, sellers are going to be coming in this sort of mid 50s, 55, 56. I think they came right in there, slapped it down, look, and really just petered out to the end of the week without any real major drivers. There wasn't a lot for it to do. This thing is really still just right a scratch off the highs, but at least, we've sort of seen it sort of slow down from this incredible sort of drive up, 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 up kind of thing. And as you can see, it's starting to sort of flatten out here a little bit. I think underneath 36, I think you're sort of probably looking back down to the bottom of this range here. I don't really see any major reasons. Like, look, it could sort of fish down under here and we could get a little bit of a pullback. But I think these levels still are in play should they get touched up. I think should you come down under here, you will find buyers at these levels. Likewise here, if you do manage to get down here on a second effort, whatever it is, I think buyers will still be lurking here. I think this is very much just maybe a little bit of sort of rounding off of the positions prior to it, just in case we see this US dollar run, and we do see gold have a little bit of a deeper correction. So I think that'll sort of prevent it from maybe breaking higher, sort of prior to the data. But I think the data is really going to be the one, whether we're going up even further or whether we're going to be sort of coming back down. Look, this isn't a major channel, but it is, significant. And I feel that sort of like, this pullback here isn't really enough to sort of say that it's done. You don't really sort of see something come up here, break, and then just peter along and then just keep grinding up here again. So I think there's probably got at least a little bit more movement around this, at least 3,600, possibly even a little bit lower there. Coming into the session though, Monday, underneath 36.36, above 36.55. They're the two levels I'm looking for sort of direction come that session. And we got copper. And copper, as I said, sort of tested up into this level, but again, it's into a resistance. It's finding sellers, and I think this is just going to be the story of this for quite a while. I imagine look, I could see this probably popping up a little bit higher here, but as soon as it gets a bit higher, it's just going to be met with selling again. So there are little bits of bursts of energy and movement, but again, I just don't see it being necessarily okay. Everything's okay now. And we can start rocketing all the way back up here. I think there's just too much damage that got done in that move. And I think a lot of people just get a bit scared of like, these are awesome moves if you're caught on the right side. But, if you're not on the right side of these things, it's a very, very high risk play, something that can just jump. I mean, this was a massive move at the time. I think it was, 17% or something. Yeah, 18% moving there. And then what's this one candle? Down 21%. I mean, that's like trading crypto, man. Like, even crypto nowadays doesn't move like this, I don't think. I don't know. I don't watch it that closely. But, yeah, look, I think any sort of movement up, if you can get back up to sort of, 478, maybe some sells down from there. But I would say this is probably more likely just going to maintain with this range here, meaning that any sort of pop up, I'd be looking for sells. But still on the back burner for me. And finally, just with one. So this is really sort of making use of this sort of support here. This is the weekly support. We've sort of covered, I've covered it a number of times. This is going back to sort of 22 here, May 22. You got this horizontal coming through here as well. This has really sort of been a bit of a sort of bottoming kind of signal or bottoming sort of formation I've seen a number of times. Because if you flip this upside down, that is a sort of hanging man, which is a reversal. This is a little shoot up to the top that takes out all the stops and then moves back down there. So I think certainly, the two levels you're looking at here is 7135 and then the bigger one underneath 715. Underneath 715, I think you could start to see this dribble back towards 720s. And this is just another sort of thing that I'm sort of looking at. Look, this could be completely wrong with it all, but you've got DXY sitting on major supports. You've got the yuan sitting on major supports. You've got equity markets right at the highs, gold right at the highs. These things are at their lows. I think there could be time for a bit of a sort of a reversal or just a rebalancing of these things. Look, I mean, supports aren't there to be there forever. So there is obviously the possibility of these things breaking down. But this little setup here has been known for being little reversal bottoms and that. This is on a weekly, so obviously a higher time frame than a trade. But if that sets the trend, that's the case. So yeah, above these two levels here, 715, you're coming into this falling resistance as well, depending obviously the speed that you get here. But I think above 715, I'd be looking for this thing to squeeze a little bit up through here. So that's very much the area that I'm interested in getting above here. That's obviously, price level wise as to when it gets there. Well, that remains to be seen. But yeah, certainly if you get a reversal here, that's obviously, again, down on gold, down on Aussie. But considering both sides of the coins, if we do come down over here, that opens the door for gold pushing up towards 3,700 and Aussie, 67, 67 and a half. I don't know. We'd have to sort of wait and see how that plays out there. But yeah, certainly interesting sort of week coming up. Going to be very busy. All right, that's it from me.